Hello everyone, my name is Ryan. I will be doing a technical analysis on New Zealand dollar versus US dollar. Now first of all, I made a trade on 4th January and earned a profit out of it. Using the primary and secondary indicator, I've managed to decide when to buy or to sell the currency. First of all, let me explain on the primary indicator. The first one is simple moving average. I use moving average to look at the direction of the chart, whether it is moving upwards or downwards. So this moving average is moving in an uptrend, which is angled up in a waveform. The moving average will act as my support level as shown in the figure. Therefore, the average acts like a floor, which is the support, so the price bounces up of it. Next is my support and resistance. I am using the trend line that will act as my support and resistance to analyze. Normally, traders use this to refer to price because possibility favors a pause or reversal of prevailing trend. Looking into the chart, the trend line colored in yellow acts as a support touching each point for traders to plan for an entry of buying. On 4th January, the third bounce, I saw an opening entry where traders can buy before the chart bounce back up. Now the last primary indicator is candlestick. On 4th January shows an inverse hammer. A similarly bullish pattern is the inverted hammer. It indicates a buying pressure, followed by a selling pressure that was not strong enough to drive the market price down. The inverse hammer shows that buyer will soon have control of the market with potential for an entry to buy. Moving on to the secondary indicator. First one is MACD, which stands for Moving Average Convergence Divergence. Now closing prices are used for this moving average. A 9-day EMA of the MACD line is plotted with the indicator to act as a signal and identify turns. The MACD histogram represents the difference between MACD and its 9-day EMA, the signal line. On 4th January, it shows positive MACD values, which is when 12-day EMA was above 26-day EMA. Notice that MACD line remained below 0.003496 during this period, which means the distance between 12-day EMA and 26-day EMA was less than that point. Next is Relative Strength Index. During a downtrend, the RSI would peak near the 50% level rather than 70%, which could be used by traders to more reliably signal bearish conditions. Many traders will apply a horizontal trend line that is between 30% and 70% level when a strong trend is in place to better identify extremes. Lastly, volume. A sudden increase on 4th January in trading volume points means an increased probability of a price changing. News events are typically moments when volume can increase. Strong trending moves go hand in hand with an increased trading volume. It can therefore be seen as a measure of strength. One would expect high buying volume at a support level and high selling volume at a resistance level. So, it is a good entry to buy. This is the result that I trade on 4th January. And I closed my trade on 6th January, which is 2 days, with a profit of 512 USD.